Right, hello, how are we doing? This, I'm going to say, is probably going to be the shortest video that I've done on a stock. DDI, DoubleDown Interactive, mobile gaming. According to this, engages in gaming throughout the business, operates through the iGaming segment. Where is it? It doesn't say on there, it says on here, mobile gaming, I think, or I've Googled it and it says mobile gaming. Here we go, mobile gaming, web-based platforms, casual players, South Korea. DDI Gaming. Now, this company at first sight, you're right, the share price doesn't look amazing. You've had this huge drop down, and previous highs, you've only got, I say only got, but you know, about 100% previous highs. Looks like there's opportunity there, doesn't it? Now, I really like this to start with. Really, really like this. I thought, bloody hell, why is this so cheap? Drag the financials into my spreadsheet. $9, right? $18 of book value, $9 of tangible book value. So straight off downside protection. Looks amazing. Enterprise value of 11.5 million. So you could buy, or you know, 451 million market cap, and actually straight away take back 440 million in enterprise, you know, cash and whatnot. So it looks amazing. Down here, look, net cash flow, so conservative version of free cash flow. I stole this from Keith Gill. That is literally just operating cash flow minus investing cash flow. Simple free cash flow is $2.87 a share. So trading at less, you know, around 3 times free cash flow. And I thought, is this legit? This looks amazing. You know, 70% gross margins. Revenues very, very stable. Share count not going anywhere. I mean, now this looks great. $19 in assets a share with no debt. Total debt of only 41 million. I think when you go on the balance sheet, let's bring it up. I'll show you. Let's bring it up. So this is a balance sheet, right? 350 million currently in cash on the books, against total liabilities of only 91 million, zero long-term debt. So the balance sheet looks amazing. Looks really, really good. Some accounts receivable, short-term investments, but a small amount of property, plant, and equipment. A lot of intangibles, a lot of goodwill, but still, you know, your current liability, or your current liabilities, or your total liabilities even, are covered by just your current assets, and there is high quality current assets. So I thought balance sheet looks really good on this. Went down to the cash flows to see whether or not my spreadsheet was correct, saying, you know, 142 million simple free cash flow in a year, interest expense of only 8 million, 126 million, so 100 million, 100 million, 100 million. I had a down year here, but in the main, free cash flows look amazing. More than covers interest expense when we know that there's basically no debt. Trading at very low multiples, historically trading at much higher multiples over here, 13s. That's the first year. So yeah, it looks really good. And I thought, what is this free cash flow legitimate? You know, trading at just 3 times free cash flow. So you go on here, cash flow statements, you know, 94 million operating activities. Now, 174,000 in what we call it. We call it CapEx, I guess, because that was an acquisition, so not necessarily to core functions. Purchasing of financial assets, not, you know, relevant to core functions. Purchase of short-term investments, not relevant to core functions. So you've got like 94 million of only 174,000 in CapEx. So you think, bloody hell, that looks good. Last year, 102 million, like 0.5 million, only 291,000 in CapEx. I thought, this looks amazing. South Korean company, so can't see any insiders here. And I thought, well, no one's really invested in it. In the States or on Whale Wisdom, you've got someone here, 100% of their portfolio. B. Riley has got about 10.7% of their portfolio. I thought, wow, that looks, this one here looks reasonable. But it looks amazing, and the share price is doing nothing. And it's not doing nothing; it's declined. Like I said, it genuinely looks like you've got around $2 a share, so there's 49.5 million shares outstanding. It genuinely looks like you've got like $2 a share in free cash flow for a $9 share price, 11.5 million enterprise value. Like, this looks amazing. Went on Yahoo Finance just to check, see if it is real. The simple free cash flow, their numbers are slightly different to mine, but still look great. Even this year here, still positive, especially when you've got no interest expense, no debt. 100, close to 100 million, 50 million, 147, 150 million. So yeah, it all looks reasonably legitimate. So I was like, what's going on here then? Why is it so cheap? And I've asked ChatGPT as well, saying what's going on. And ChatGPT originally said, are you sure that's correct? In my free cash flows. And I was like, well, I've looked at the balance sheet, it is correct. Retained earnings as well. Look at this, retained earnings. Sheets, just bring it up. Where am I going? Expand all. Let me try and find it. We struggle to find this one, but yeah, retained earnings 148 million up to 472 million in just 4 years. So the financial state of this company looks brilliant. I've gone on X to have a look. There are people buying it, bought it, DoubleDown, this guy says. This man here had bought it. This was one of the comments, actually. We'll get onto it. I'll go back to it. This man here opened up, yeah. Other people here, I think some of these are bots, but there are legitimately people posting about it, saying, I like the look of this company. I read this comment here, though, this one here, highly profitable gaming companies. This one? No, not that one. This one here, sorry. After mulling over corporate incentives for these two companies, I decided to exit DDI. I was like, okay, what's going on there? So I asked who the majority shareholders were, and we can find it. I will show you it in a second. DDI's majority shareholder is W Games Co Limited, Doug, a Korean game company, according to the 20F filing. So went and brought up the 20F filing. Here, documents. Here we go. Just type in. Oh, I've done it already. Look, beneficial. Try and find it. Here you go. Beneficial owners. So W Games ran about 70%, with almost another 20% held by these, and then the B. Riley owning that 10%. But absolute control of this company, this W Games. And I was like, well, who are W Games? This is what ChatGPT came up with. Look, because Doug controls DDI, a few red flags of potential governance concerns exist, likely contributing to the investor caution. As a controlled company over 50% of voting power, DDI may opt out of certain corporate governance requirements under NASDAQ rules, the filing says. As a result, we are a controlled company. The interests of W Games may differ significantly from those of our board and of other shareholders. Now, the filing further notes, Korean law does not recognize the concept of controlling shareholders' fiduciary duty to a company or any such company's minority shareholders. So, here we go. This means that the controlling shareholder may not have the same obligation to act in a minority shareholder's interest that would be standard in the US, in a domestic US company. So this is the problem with W Games, unfortunately. They don't care about the minority shareholder. They're creating all this cash. There's no buybacks. Is there a dividend yet? There's no dividend or nothing. And so they effectively, I'm guessing, want you to buy in, and they'll invest your money, but you're not going to get any return from it. It's all going to the W Games, and that's that one, unfortunately. I got a funny feeling this comment down here, look, so he's talked about it again, saying it looks really great. But no, not that comment. There is another comment with someone. Where is it this one? It's cheap because the controlling shareholders refuses to ever do buybacks or dividends and have no regard for minority shareholders. So that's it. That is, unfortunately, DDI. Looks amazing, but they don't care about the minority shareholder, and that is us. And that is that. So you'll see me do it here. Look, red, not worth looking into anymore. My blue ones mean that they're sort of like on a watch list, and I should go back and look at them if, you know, when the price gets cheap enough. But yeah, DDI goner, I'm afraid. Looked great, is great, but not for the minority shareholder. So there we go. Unfortunately, moving on to the next one. So thank you very much. Like and subscribe. And this is easily my shortest video. So there we go. All right. Good night.